Hello and welcome everyone. I'm Patricia Kingston and I'm the Corporate Events Officer at Tourism NI, and I'm absolutely delighted to welcome you back today for the second of our TED Experts Business Finances webinars being delivered as part of this year's Tourism Enterprise Development Programme. We're joined once again today by financial management and corporate governance expert Tony Haren from Admor Business Solutions, who also joined us last week to deliver the session on how to organise your business taxes. So we're really interested to hear what Tony has in store for us this week. So today's session is how to fund your business. During this morning's presentation, Tony's going to reveal how banks look at funding and how you can plan for funding applications to both mainstream banks and possibly alternative funders. So Tony's also going to be staying on at the end to answer any questions that you might have. So if you have anything at all that you'd like to ask Tony, just pop it into the chat box in your control panel at any point during the presentation, and I'll be picking up as many of those as possible at the end. So it's set to be another information-packed session if last week's anything to go by, so we'll get straight to it. My pleasure now to hand you over to Tony to kick off today's presentation. Over to you, Tony. Good morning.
Good morning. Yep, thanks very much, Patricia. Thanks very much for the welcome there. Yeah, we did a good session last week, and I think as I explained last week, it's sometimes difficult to cram everything somebody needs to know. In fact, it's not possible to cram everything people need to know about a particular topic inside an hour. We did a good job last week, I think, with the taxation. I'm going to try and do the same this week with the funding, how to fund your business. And I do appreciate that everybody is at a different stage of business and they are all doing different things. And sometimes they need funding and sometimes they don't. But I guess everyone on today who signed up for the webinar today is interested in either funding now or sometime in the future. So we're going to make a start on that. And we were going to do some polls there. I'm not sure if you're going to do those first, Patricia.
Yeah, we'll just run into your two first polls, Tony.
Okay. Yeah. Okay. First two polls we're going to do just about your business structure and then how long you've been trading. So if we can get those polls up now, that'll be great. Yes. Okay. So we have a good spread again, like last week. So obviously, all businesses on the webinar this morning. So sole trader, limited companies sort of equal there, and then we've got a number of partnerships as well. So yes, that's good. That's good to know. Just the nature of the people who are listening, and then how long you've been trading. Okay, so more than 3 years, almost 60%. Some people haven't yet started, others are at early stage, startup 8%, and then we've got a quarter of people more or less in 12 months and 3 years. So that's a good spread of people. Obviously, most people here on the call have been on the webinar have been trading for some considerable time. And that's quite that's important in terms of understanding your funding. So I'm going to just carry on now with the webinar. So, okay, so the structure today is funding is a broad topic, as I said earlier. So, but business funding is a really important part of a business's startup and growth. So, really important that you understand, first of all, what business funding is, which is what we're going to look at, and then when might you need it. So you might need it at different stages of your business life cycle. And then where do you access it? So who are the funders? And also we're going to look at how you approach those funders. And we're going to do a little bit at the end in terms of some next steps towards what things you might want to think about if funding was an issue for you. And then we're also going to look at how do you secure external funding. So basically, and that's a real issue. I mean, funding is a topic that is of particular interest to me. I mean, I started my career in business in banking, and I spent about 25 years on the business funding side. So part of my role, I was a branch manager, I was a business center manager, and I would have been working with small businesses to help them secure funding and get funding approved through the credit risk department who take the final decisions. I also spent about 15 years in credit risk, working on a whole variety of business loan applications from small businesses, medium-sized businesses across Northern Ireland. So it's an area that I'm particularly interested in. And those who don't know me, I'm a chartered management accountant, so the whole financial part of it particularly interests me. And when I talk to small businesses, I'm increasingly aware that a lot of them aren't exactly sure how to go about the funding process. They're not sure how to approach lenders, and they're not sure how to put together an application and the sort of questions that might need to be asked. So hopefully we'll cover a lot of that today. So first thing I'm going to look at is what is business funding. So the way I try to just summarize that for people is that if you look at it in two ways, one, you look at what the sources of business funding are and what the uses of those funds are. So I'll just list those for you. So sources of funding can usually be split into short-term and long-term. So the long-term funding is typically equity or share capital in a business. So those of you who've got a living company out there, almost 60%, basically they are, you will have a share capital in your business. So you will have set up your business with some share capital, be it £1 or £2 or £100, something like that. And the profit that you make in your business will be added into that equity as you grow your business. Long-term funding as well can take the shape of family loans. So some families can be very generous and want to lend money to somebody who wants particularly to start up a business or wants to expand a business. Bank loans as well can be provided for the long term. Things like commercial mortgages, long-term loans, buy-to-let mortgages, they can be longer term than just a less than 1 year, which we'll define as short term. And grants as well are also a source of funding. Not a huge amount of grants out for businesses, but there are some out there that are available and are worth applying for. Some currently on offer from InvestNI for growing businesses. And the short term types of sources of funding would be things like a bank overdraft, trade creditors, that people who owe you money. So if somebody, sorry, people you owe money to, if you owe money to somebody, they're a trade creditor, maybe some supplies you bought from them. If you owe them money and you haven't paid them, those funds are still in your bank. So you're using them as a way to short-term fund your business if you haven't paid them. And other creditors like taxes. So they're typical short-term funding sources. And then the use of those funds. So what are those funds used for? So longer term, they're used for things like property, vehicles, fixtures and fittings. So longer term fixed assets, if you like, that's how they're called in a bank's or in a balance sheet for a small company. And short term, less than 1 year, things like stock, materials, trade debtors that are the people who actually owe you money, people who have invoiced typically, and cash. So basically, when you look at business funding and you're trying to understand what business funding is, if you think of it in terms of the sources of funding and then what the funding is used for, and to me, that's what a business balance sheet looks like. So every one of you there who has a bookkeeping system, and hopefully you've progressed to the cloud, maybe you haven't yet, but I would encourage that. If you've got a cloud-based bookkeeping system that you currently use, you can go in at any time and look at your balance sheet as of yesterday, as of today, now, as of last month or the end of last year. And in that balance sheet, it will show you all of your sources of funding and all of your uses of funding, because they will be on either side of your balance sheet. So anybody who's wondering how they're currently funded, just go and have a look at that after this webinar. Just have a look at that and see how you're currently funded, and make sure that it's the proper structure for you. So I just want to mention why funding is critical. That's an extract from a CB Insight survey that was it's a few years ago now, about 5 years ago, but it's the top reasons why startups fail. So you can see that the very top reason there is they ran out of cash, failed to raise new capital, 38%. So basically, that's one of the big reasons why startups fail. They don't have enough cash to carry on with their business. So for startups, funding is really critical. Now, funding is not an easy thing for startups to get from banks. Banks are not necessarily very open to lending to startups. They will look at it, they will consider it, but they do look for business owners to put in some cash themselves. So they're unlikely to want to fund 100% of any startup. So running out of cash is a big issue for startups, and why when you get your business up and running, and I know some of you are pre-start and even early start businesses, make sure that your funding structure is correct. And we'll talk a little bit about how to do that. There's a few other reasons in there. You can see a flawed business model. You can see pricing, cost issues. So finance does find its way into the reasons why startups fail. Finance in one way, shape, or form. There's other ones there. You might look at that for a product mistimed, etc. If it gone bad, burned out, a lack of passion, which is down the bottom there, which is a small reason why startups would fail. And you can see, because they add up to more than 100%, that there's people have given multiple reasons in their answers. So may have run out of cash, and then it may have been a flawed business model as well. So that's just to give you an idea of the importance of funding. And when might you need new funding? So some of you out there might need funding right now. Some of you may be thinking that if you want to grow your business, you may want to source some funding as well. So I've just analysed it under 3 headings. So startups. Typically, startups might need it for things like premises, for a new website, for product or stock if you want to buy and sell stock, even for marketing and branding. So there's different things that a startup will need, and they need to think about that when they're starting up their business. If they're doing a business plan, they need to think about what funding they need and where it's going to come from. If it's from themselves, we'll talk about the sources of the funding in one of the later slides. You may need it for growth. So those of you who have been established, there's quite a few established between 1 or 3 years and over 3 years as well. And you may need it for things like bigger premises. You may want to develop new products or services. There may be a cost involved in that. There may be warehousing issues if you're or somebody that you need to store your stock and need somewhere bigger. You may want to develop more products or different types of things you want to stock. And then you've got new markets as well if you want to go into new markets, or there's maybe beginning to think about employing staff, and you need to think about how you fund that. And generally, businesses as they grow have bigger overheads. So overheads are just the expenses, the things like insurance and rent, and yes, it does include salaries and things like that. So basically, if you're thinking about growing your business or you've begun to grow your business, then funding is really important, because growth does need to be funded. It doesn't necessarily need to be funded by external sources, but it does need to be funded in some way. It's also possible that businesses that just run into problems need new funding. So for instance, if you lose a contract, if you have a big drop in sales, some sort of seasonal issues happen as well that mean that your cash flow has changed. You could have some bad debts. Maybe you've exposed yourself to one particular customer, and they have ultimately left you high and dry in terms of paying their invoices, or it could be personal issues, things that you run into on a personal basis, and you may need to think that, you know, I need to get funding, I need to get something into my business. So all of those are triggers, if you like, for a small business or medium-sized business or a large business to begin to think about when they might need funding. And the key in all of these here is to anticipate when you might need it. You know, if you need funding and you think you might need it in January, you need to think about doing something about it now. There's no point waiting until middle of December, end of December to get something done. You can get some funding quite quickly, but the longer you leave it, the more difficult it is to source it, and you may run out of options. So it's a bit of timing issue as well. So where do you access funding? So this is going to be the structure of the rest of the presentation, the webinar this morning. So basically, I've broken into these key areas here. So where can you access business funding? So you can access it yourself. So you can self-fund your business. In other words, you don't need external funding for your business. So a lot of startups are self-funded. They have their own money, they put it into the business, and that's how they start up, and they don't look for external funding. But others don't have enough funding themselves, so they need to think about family and friends. They need to think about some business borrowing, or there's equity investment, which is external, or there's grants. All of those are different ways to fund your business, different sources, if you like, and places where you can think about going to get the funding that you need. So looking at those, the first one is internal. I call it internal funding. So you're not looking for any external funding, and the rest of those are external to the business. So basically trying to think about your funding. If you are entirely self-funded and you're internal, in other words, that you just use your own funds to fund yourself in your own business, that's one way of doing it. But there are issues and restrictions for that. So I'm going to look at each of these in turn, and I'm going to talk about the advantages and disadvantages of each. Just another quick poll here. This is just as we look into the external funding part here. Just if you could just answer this, give me some idea of whether you plan to seek funding sometime within the next 2 to 3 years. Okay, that's we've got There's some, okay, there's nobody in the, I've enough external funding, will not seek any. There's a few in the fully self-funded and going to remain that way, which is good. And that leaves the other 92%. Not sure, I may need some external funding, and those who will definitely need external funding who are the majority. So over half people on the webinar this morning will definitely need some external funding. So a lot of what I'm going to be talking about this morning is going to be for you. It's important that you identify how much you need. Back to screen. Yeah, it's important to identify how much you need and where you're going to get it from, and then think about how you're going to apply for that. I'm going to talk you through those steps. So we talked about the self-funding sources, and those of you, the small number of you who are self-funded, you maybe already know this here. If you want to self-fund yourself, it's going to be from savings, from personal income, from retained business profits, i.e. your business is making profit and generating cash every year, and that's just being used to grow the business, etc., or from personal borrowings. The personal borrowing isn't technically fully self-funded because there is an element of external debt, but it isn't necessarily a business debt. It's just money you borrowed yourself from some outside source. The advantages of self-funding: easy to organise, fast to set up. You can read those yourself. It's less complex. You can keep control over it yourself, keep all the profits, and there's less external pressure, and you can get out of it quite easily because it's just yourself. Disadvantages: it can limit growth. So if you are self-funded, it can sometimes limit growth, because if you want to grow fast and grow big and you don't have the internal self-funding for that, then looking external may be an option, or maybe something you would want to consider. I'm not encouraging people to go and get external funding if they don't need it, but if you want to grow beyond a certain size, then external funding may be something you should consider. So it can limit growth, as I say, doesn't share any losses, it doesn't spread the risks. It's going to be just you putting in the money and running the business yourself and taking the risks that go with that. And if it is just you again, you don't necessarily attract any wider skills or external challenge necessarily to the business from a funding source at least. And if you do that external loan, then you must repay that. So family and friends sources around the external sources of funding. So again, very similar to self-funded sources. So again, family friends sources can be a good way to get money on a reasonably informal basis. Family savings may be available. Some families will actually borrow money on behalf of other family members so they can invest in it. Friends sometimes invest in it, usually from their savings, and sometimes family and friends provide like in-kind funding, so they let them use a part of the premises or something where the person maybe doesn't have to pay rent. So there's a way to do that on a casual way. It's normally not a formal equity stake. Do treat it seriously. The reason I say that is that normally if a family and friends give you money, it's not necessarily for in a formal way. They're maybe it's a bit informal around the repayments and when they happen. But I do say to people, I meet quite a lot of people who've got money in from family and friends, and I do say that the business should treat it reasonably seriously. They should think about the money, where it's come from, and they should have some sort of agreement with the individuals as to how it's going to be repaid. Because if they haven't thought that through, it can cause problems later on. Just mention that now. So again, the advantages and disadvantages of the family and friends external source funding. The advantages, obviously, you probably guess a lot of these yourself. It is easier to organise. It's similar to the self-funding. It's usually less complex. Repayments are usually flexible or can be flexible. Again, because there's no equity stake, they're not taking a share in your business. You can keep 100% ownership and control. Usually easier to exit than if it was borrowing from a formal source like a bank or an alternative finance provider. Disadvantages: there are more external pressures than if you're self-funded. You may need to share some of your profits if they do take an equity stake, or if they want to just get their money back from your profits rather than just a formal repayment schedule. It can risk relationships. I say that again because it's possible that if you run into difficulties and you can't repay the funds that some family members lent you, then it can cause problems. And certainly if it's friends, it can cause even further problems. So it's about, as you go into it, just be careful about how you go into it and think about how you're going to exit from it and how you're going to repay. It may not attract wider skills because the person may just give you the money and let you get on with it. And if it's a loan, family loan, then the business must repay it. Okay, so we're now getting into business borrowing, which is probably where many of you will be thinking about looking to for the funding that you need for your business. So I've split this into what I call two categories of lenders, and one of them is traditional lenders, and the other is alternative lenders. So by traditional lenders, I just mean the high street banks. I hope I named them all. They're all the local ones there. So basically, all the local banks would be traditional high street lenders, and they would you'd be familiar with how they operate. You would contact them, you would go through an application process. They would make a decision on your loan, and they would typically set up the loan with terms and conditions, etc., and you would pay them back. There are alternative lenders as well who provide funding to businesses. So the likes of credit unions, the likes of Enterprise NI, and I'll talk a little bit about those as well. We've also got a touch on crowdfunding and peer-to-peer, P2P lending. We'll look at some of the platforms that are out there because alternative lenders have grown quite a lot in recent years, and you may have come across them. They've just shaken up the market a little bit because some of the traditional banks, I think, through maybe closing down some of their high street physical premises, have just made them a little less accessible. And with the growth in the internet, etc., then these online lending platforms have just grown. So I'm going to touch on that and explain how they are available. And they wouldn't be as common here, I don't think. I was speaking to a banker recently, and they say they're not as common in Northern Ireland in terms of an alternative lender, but they're certainly across the rest of the UK, and in England, Wales, Scotland, and GB part of the UK, they would be probably more prominent than they are in Northern Ireland. I finally mentioned our PayPal and credit or debit card lenders. There are organisations now like PayPal who will lend to you based on if you take payments in through PayPal, they will lend you some money in the expectation that when you're receiving your money in the future through PayPal, they can take the repayments from that. So that's a different way of borrowing money to some of the more traditional methods. Credit unions, just to mention those, they typically still lend to individuals, but they will lend to individuals who may in turn want to put that money into their business. So the types of products that you can get from business borrowing and those traditional products from your main business bank, like an overdraft, which we mentioned earlier. An overdraft, for those who don't know, it's just a limit on your current account. It allows you to go overdrawn up to that limit. So a £10,000 overdraft allows you to draw money up to that limit of £10,000. The expectation is that overdraft will fluctuate. It will go from debit to credit, and it's usually for short-term borrowing. It's usually only for working capital, for short-term things like stock, raw materials, paying your wages, things like that. That there's a need for something short-term. It's not a long-term facility and not a long-term product. Term loans, on the other hand, are longer. They typically will be anything from 2 years up, maybe 2 years to 5 years for a personal loan, and commercial mortgages can go up to 15, even sometimes 20 years. So they're longer. They tend to fund fixed assets. You can get things like stocking loans as well, where you have a big stocking requirement, and banks will typically fund the stock that's going into your business. Or debtor finance, which is where if you're a business that issues a lot of invoices, they would fund those invoices and give you advance payments on those. So there are different products out there that are available to fund your business. And you can go to the main bank for traditional lending, and you can also go through a commercial broker. So a commercial broker is somebody who you would approach, and they would do the approach to the bank. So you might go to a broker and talk to them about what you want to borrow, and they then in turn will take your application into lenders directly on your behalf. They'll charge you a fee for it usually, but they are like an intermediary basically, and they can take you into the main bank. But they would still be ending up with the main bank products, but some of them do as well have linked into some of the alternative finance. I just want to mention the alternative sources. So we've looked at the mainstream banks now. So some of the alternative sources, which we mentioned there just on the previous slide. So one of them is Enterprise NI. So Enterprise NI, some of you may have come across, and they are the umbrella organisation for the local enterprise agency network across Northern Ireland, of which there's around 30, maybe 29 now. They're based out in your local areas. You may be familiar with them, the likes of Causeway Enterprise, there's Carrickfergus Enterprise Agency, there's North City Business Centre of Belfast, and there's others around Northern Ireland, in the northwest and Mid-Ulster, everywhere. So those local enterprise agencies work with Enterprise NI, who are their umbrella membership body organisation, and they provide loans for startups from £500 to £25,000, and there's a link there to their website. I'm not going to take you directly into that at this point, but they have a website there that you can look, and the links will be available on the slides that will follow. They also have a Northern Ireland Small Business Loan Fund, which is between 10,000 and 100,000. So that's for existing established businesses. So it's a higher amount of money and is available to established businesses if you want to borrow from. I will actually click on this link and just go look at their Small Business Loan Fund. So bear with me on this. It's two screens here, so I'm just sharing this with you. So the Northern Ireland Small Business Loan Fund is administered by Enterprise NI, and you can see this. There's a little bit about us. There's some case studies, there's policies to help you to grow your business through access to finance. So loans from 10 to 100,000 for small businesses in Northern Ireland. You can select the business type, your startup or existing. The fund is part of Invest NI's access to finance strategy. I'll actually share a slide with you on that as well, just to show you. So what can I apply for funding for? Startup costs, expansion, growth finance, working capital, products, match funding, and new asset purchases. A little video to watch, which we're not going to go through. Some case studies there if you want to read them, and it's quite informative, and they are quite a personal lender. You can approach those and talk to them on the phone and things like that. And I was speaking to a business yesterday who's actually just secured funding from the Small Business Loan Fund, and they're quite happy with what they got from them. So representative APR, you'll see there 15.6%, which is probably a little bit higher than what you get from mainstream lending. But again, the rate is decided as part of the application process and decision-making process. So I'll just share that with you. And yeah, the Invest NI access to finance. There's a slide following. I'll not click on this, but I'll take you through. I'll show you another slide that summarizes what's on that page. We mentioned peer-to-peer lending, and that's something we'll have a quick look at as well. And the PayPal and credit card lenders. I'll show you this is a crowdfunding online. So Funding Circle here are a provider of alternative finance to small businesses. And I'll just drag that over. So this is Funding Circle, which is just one of the peer-to-peer lenders. They do business loans. There's a little bit recovery loan scheme, asset finance, with different tabs up here you can go through, but you can check if you qualify for a business loan in 30 seconds. Get started. I'm not going to click through that. We'll go through that whole business. They do loans from £25,001 to £250,000. That's under the recovery loan scheme. They do smaller amounts than that. So there's a little calculator there as well, how much you want to borrow, how many months. You can flick it out to do up to that's 6 years. And I'll give an example there. I'm not sure there's an interest rate example down there, but I'll get into that as well. You can have a check that out afterwards if you want to see what they might be able to offer you. You get a personalized quote without affecting your credit score. Check if you qualify in 30 seconds. Apply online in 10 minutes. Alternative funding providers like this tend to be quite quick, quite responsive. They tend to be more responsive from high street banks, but not in every case. So you may find some high street banks are very quick at turning things around, and you may find going through a process like this because they may ask for more information. They may look for some accounts, for some information that you haven't submitted, and that can take a little bit longer as well. So, but it is an option and something that you can consider as an alternative source of finance. The next one, British Business Bank. Yeah, I'll just click on that as well very quickly, just to take you into that and show you what that looks like. Again, you may have heard of that. British Business Bank gets funding from the UK government and other sources. And they do peer-to-peer lending, which they describe as business loans from individuals, businesses, and institutions that are generally given through online platforms. So basically, peer-to-peer lending is lending by other people, by your peers. So people sign up to it as lenders and people sign up to it as borrowers. And the platform matches the borrowers with the lenders. And the rates are all agreed at that time. And the funding is provided through the platform and repayments are provided through the platform and then sent on to the actual funder themselves. So quite innovative and quite different. And again, there's some case studies in there that you can have a look at and see if it is something that will be suitable for yourselves. Most people would probably start with their traditional bank in terms of looking for funding if they've got a good relationship there. And only if that doesn't work, go and have a look at the alternative funders. But that's not always the case. Some people decide to go straight into an alternative finance provider like this. So lots of questions answered there, but what are the risks involved? Is peer-to-peer lending right for me? But I'm not going to go through it. It won't be time this morning to go through that. So that'll give you an idea of those alternatives, and they are the links from that will be available on the slides when they're sent around. Yeah, that's it. That next slide is that's the extract, or it's a screen grab from the Invest NI page on their Access to Finance page. That's a quick graphical of the funds that are provided through Invest NI and Enterprise NI. So you can see down at the bottom there that this little graph here shows that from 10,000 to 100,000, there's a small business loan fund, which has £8 million of funding in that pot. And then there's from £100,000 of borrowing to £500,000, there's the growth loan fund, which is 30 million, and another 30 million in the growth finance fund. So they're loan funds. That's for borrowing between 500,000 and 2 million. And that's provided by, those latter two are provided by Invest NI. This one is the one that I talked about earlier, provided by Enterprise NI. We also do startup loans, which are separate to this. You see at the top, I'll just mention this because we will be talking about equity funding. And Invest NI, through those two funds, the co-fund 2 ERDF fund, 70 million, the top one, that provides equity funding, and the lower one there, the Techstart NI, has 30 million of funding. So the co-fund 2 at the top, it provides funding there, as you can see, from 150,000 up to 2 million, and the lower one 50,000. So 50,000 up to 2 million. So if you are larger business looking for a higher amount of funds, you probably should be speaking to Invest NI, who might provide some sort of a portfolio or a package of funding. And some of the mainstream banks will join in the types of funding for larger businesses. So if you need to borrow $500,000, it could be that they provide some traditional bank funding, some of the loan funds there from the growth fund at the bottom perhaps, and then perhaps in some cases some equity funds as well might be provided. So you can see that while I'm trying to sort of put everything into a little box and say, here's lending, and here's equity, and here's small business, and here's traditional funding, and here's some alternative, it does overlap quite a lot. So I'm trying to just explain that it does overlap, but trying to take out each little piece and explain to you how it might work for you. If you're not in that category, you don't need to worry too much about that. That's obviously for larger businesses there, but a little bit at the bottom there, between 10 and 100,000, I'm guessing that might affect or apply to a number of businesses, and that here on the webinar this morning, and that's the Enterprise NI Loan Fund. Business borrowing, the advantages and disadvantages. So the advantages are it maintains 100% ownership and almost 100% control. So you don't give up any equity typically if you're borrowing money for your business. So it's only if you're giving up an equity stake that you have to worry about losing some control, losing some ownership. You might lose some control because all of a sudden you've got a lender who wants to get quarterly finance accounts, who wants to make sure your payments up to date, who may want to do an annual review with you. So there's a little bit of external responsibility for like comes with business borrowing. It obviously can support growth, and there are flexible alternatives. As I explained on the last slide, there's just a number of combinations of different providers that can all come together, and they all offer different things at different rates over different terms. Disadvantages, it is more difficult to organize. I'm going to talk a little bit about that because it's important that you understand how to approach a business borrowing requirement. There are more external pressures. They usually have to repay it in fixed terms. Sometimes it may not reflect business seasonality. So borrowing, may not necessarily reflect your ups and downs in the year. Maybe just a flat amount of money that you're gonna ask for, and that's provided over the course of the year, and your repayments take place over the course of the year. But sometimes those repayments might hit you at a time when you seasonally don't have as much money coming in. So that's something you need to think about. Now, the banks are a little bit more understanding of that, and they are looking to maybe accommodate perhaps a more flexible approach to repayments and just straight one every month for 12 months or for 36 months. Won't attract wider skills again, and that means bringing in other people with you, as an equity stake might do, and obviously more difficult to exit, because if you've got business borrowing, you can't just let it go. You've got to find a way to get it repaid. So yes, how to prepare for borrowing. So this is something that is really important. It's an issue that I find regularly when I'm speaking to businesses. They're not quite sure how to approach a lender. So the questions I'm usually asked is, how do you approach? Do you need a business plan? Do you need cash flow forecasts? So I say to businesses that I speak to, look, it's not necessarily about the need to have a business plan in every case. But not all the banks look for a business plan. Not all of the online processes look for business plans either. So it's something that you may have to get, you may have to produce and develop, and alongside that some cash flow and maybe some profit forecasts as well. But invariably they will all have an application form, part of that process. Now, if it's family borrowing, that obviously won't happen, but all of the external sources will require an application form, and they will ask you certain questions that you must answer, and it's based on that they'll make a decision as to whether they would lend you the money or not. So my advice is check with the lender, find out if you decide to borrow a certain amount of money, and you look at the different alternative lenders, look at each one of them and decide, look into their website and how do I actually apply for this? What do I actually need? Just a quick tip, they're all looking for repayment capacity. Now, by that I mean they're looking for evidence that your business can repay them. That's the main thing they're looking for. The different ways of asking that sort of question. So this is it from a lender's viewpoint. So I'm just going to ask you to stop for a second and just imagine that some distant family member has asked you for a loan of £20,000. So somebody you don't really know that well, and they want to borrow £20,000 for their business, and they tell you they're going to fully repay it in 12 months. They say, trust me, I've got a great idea. I'm going to put this money into ABC, and it's going to pay me it all back, and I'm going to have all the money back to you within a year. Now, you may be sitting there saying, well, I don't have 20,000, Tony, so that question is just ridiculous. I don't have it. But just for a second, imagine you did have it, and this family member knew that you were a person with substantial funds. Just think what it is from the lending perspective, not just from a borrower's perspective, which you are at the moment, or a potential borrower. So what sort of questions would you ask? So you'd ask, as you're thinking it through, I'm guessing some of these are the questions that are popping into your mind. So what is the business? So what are you investing in? So if somebody says, invest in my business, you want to know what it is, what they do, what are they selling? So what products are there? What services are they offering? You want to know where are they located? So, are they located locally? Are they online? What is it? So you're just digging into it to find out what it is. What am I putting my money into here? Have you any trading history? So is this a startup, or have you been trading for a while? Have you been making a profit? Are your sales good? What are your level of sales? Have you any experience in this area? Is this something brand new you're starting, or is this something you've been very good at and now you're going to expand it and do something better? And you've got a skill in a certain area that could be developed. Do you have any other debt? So somebody wants to borrow 20,000. Have they already borrowed 20,000 from somebody else, or 50,000 from somebody else, or have they got a bank loan that they can't repay, and your money's going to be used to repay that? So all those questions may be springing into your mind, and then you want to know how much have they invested in the business themselves. So they want to borrow 20,000. So what's their skin in the game, as they say? What have they put into the business themselves? And then who owns the business? So you want to know, does this person own the business, or is it a partnership with somebody, or is it a limited company you're putting the money into, and you've suddenly got a company debt? So those are just some of the questions that you need to begin to think about if you were being asked to lend the money to somebody. So the banks and the funders, the lenders particularly, are asking the same questions, and that's what usually finds its way into the application forms. Finally, there's just another one, who are the competitors? You want to know who also is doing this here? You know, is it somebody else? Is this a new thing to the market that nobody else has? So is it very distinctive, unique, unique selling points, all of that? So really lots of questions. You might even have thought of some others that would occur to you if somebody came to ask you for that sort of money. Okay, so back to law, ask mostly obvious same questions: repayment capacity, focus questions, the ability. What is the ability of your business to repay any debt and the risk of non-payments? That's what the banks are going to ask for you. They do repayment calculations based on net profit usually. So if you're an existing business, they want to know what your profit history is. So, and they usually look for the last 3 years, just to have a check on that. And they want to make sure they're sufficient to cover the loan repayments between 1.5 and what I call 1.5 and 2 times debt service cover. So I'll explain what that means. Little worked example there. If the loan requested for £50,000 over 5 years, interest rate 8%, if the repayments on that work out at say £1,000 a month or £12,000 a year, and your business has a net profit of £24,000 on average over the last 3 years. So 24,000 on average over the last 3 years. The bank would look at that and say, well, you would have debt service cover based on your average profit over the last 3 years of 2 times. Your 24,000 is twice the 12,000. So they look at that as 2 times cover. And banks generally look for something between 1.5 and 2. So your trading history is part of the process by which lenders will consider lending you money. Positive credit appetite, T&I sector. Yeah, just to mention that, I was speaking to a business recently, and they'd approached their bank for some funding, and they're in the leisure sector. And one of the reasons the bank gave them was, they told me, was that they didn't have an appetite, a strong appetite for lending into the tourism sector. And that took me by surprise. And I made a few calls into that bank, I won't name, but they reassured me that that wasn't the case, and that they have actually a very positive appetite to the tourism and night sector. So credit appetite is an important thing, because if banks don't have an appetite to lend into the sector, then you're up against a little bit of a brick wall even before you apply for funding. But it is not the case that this bank, or indeed any of the local banks, have anything but a positive credit appetite to the sector generally, which is good news, obviously. When I asked the business to give me a copy of the email or a letter turning them down that explained that, he wasn't able to provide it, and he thought it was something that came across in a conversation. So it may not have come across the right way, but ultimately that's just an example to show you that sometimes, depending on what sector you're in, the bank may not have a positive appetite to it. But generally, tourism, NI, hospitality, leisure sector, the banks are positive. Just want to move into equity investment now. I did mention Invest NI earlier, who provide equity investment at much higher levels. Just to mention, angel investors are typically high net worth individuals who may invest individually into your business. There's venture capital funds as well, who provide high growth and startup funds. So there's a Catalyst Inc., I think, are one of the local companies who provide that type of funding. Crowdfunding by way of equity. There's enterprise investment schemes who, it's like a tax-related scheme. I mentioned these just in passing, just because you may have come across them. There's rules and regulations around that. And again, family and friends could be a source of equity. By equity, I mean somebody who invests in your business and takes a share, as opposed to debt, where they just lend you the money and they don't take any share in the business. So equity investment needs to be thought through carefully. There's a link there to the NI Business Info website, which I'll not click on now in the interest of time, and it provides details, a little bit more detail on each of those 6 sources of equity finance. The one that's missing there I did put up was public share offerings, so probably a lot above what most of the, maybe all of the attendees this morning are. So really, if you're going for a public share offering, that would be number 6. So there's a link to that, and if you want to check that out, you can. Crowdfunding as well. We've had a look at crowdfunding earlier. Crowdfunding, like peer-to-peer lending, is something, I won't click on that link in the interest of time as well, but crowdfunding is a way where you can gather equity from the crowd. So that's what that is. It's another alternative funding source. And there's a link there to Crowdfunder, who are one of the providers of that. And similar to peer-to-peer lending, it's where a group of individuals get together and are prepared to invest some equity in your business. And that again can be done online through one of the online platforms. So again, if you're willing to give up equity, then you might want to think about these alternative sources. Equity investment in terms of advantages and disadvantages. Equity, clearly it can support growth. It's a very good supporter of growth. It's long-term funding typically. If you get an equity investment in your business, it can attract wider skills, so you can get some mentoring, like an angel investor would typically provide some mentoring to the person they're investing with. Usually no fixed repayments, or some certain types of share capital that can be fixed, but generally no fixed repayments long-term, and there's no interest to pay, but you will pay dividends. You do lose ownership, 100% ownership. You lose 100% control. It's more difficult to organise, more external pressures. You've got to share your profits, and getting out of it, your exit strategy is a lot more difficult when you've got some equity investor there, because they have rights as shareholders, even if they're minority shareholders. But it is worthwhile thinking about maybe in the longer term for some businesses who have substantial growth potential. Fifth area of external funding, I'll mention very quickly: grant funding. Usually non-repayable advantages and disadvantages. Usually it is for a specific purpose, requires you to spend your money first. You do usually have to provide evidence, validation of what you're spending the money on, and it's usually taxable. I'll mention something. I just got an email there last night actually from one of the local councils. I had provided support through one of their programs for, it was actually a social enterprise. It wasn't the tourism NI sector, but it was a social enterprise. And they were applying for funding to fix up a community centre that they wanted to do and provide programs to support the local community. And they had an application process to go through, but the application process also required a business plan. And I helped them with the application process and the business plan. And I knew, they told me about 2 months ago that they'd been successful in getting the grant. They'd actually applied for about 30,000 of a grant. And very unusually, they actually ended up getting 56,000. So they got almost twice as much as they asked for, because they'd underestimated the ability of the funder to give them the funding. But the point is that it was the business plan that they felt made the difference, because it explained in more detail than the application process what it was they were trying to do. And they sent, the council person met the person last night, and they just passed on their thanks to me for the work that I'd done on it, because they said without the business plan and without that clarity around what they wanted to do, they wouldn't have secured that level of funding. So business plans are relevant across the piece. They're not always required, either for grant funding or for business borrowing, but there's something you need to think about at times. Just want to share with you the sources of funding portal there. That's the NI Business Info website. You may be familiar with that. That's a little portal that you can go onto at any time. I'd suggest maybe after this webinar or sometime next day or two, go and have a look at that. It's a business support finder. So you can go in there and click what you're looking for. Your business need is list things like employment, exporting, growing your business, product development, R&D, it's research and development, reducing costs, marketing, sales, all those sort of needs. And you can go in and talk with your sector, your business size, your business stage, what stage you're at, and it will come up with a list of potential support that you can get for your business based on the criteria you input to it. So very, very useful little tool that allows you to go in and sort of narrow down the support that you might need. And it's not just financial support, there's other support in there as well. Yeah, this is now towards the end of the webinar, just how to fund your business, your next steps. So these are suggestions to you. You know, I believe that it's important that every business should, if you're not looking for funding now, you should be thinking ahead. Okay, and I did suggest earlier that if you wanted to see what your exact current funding structure is, those of you who have a bookkeeping system that has a balance sheet on it, that will probably be a cloud-based system like QuickBooks or Xero or whatever. You can go in at any time and have a look at your balance sheet and see what your current funding structure is. And go in and have a look at it and just decide, is it right and appropriate? And if you're looking at it saying, well, I don't have much funding there, I really need to do A, B, C, and D, and I don't have the funding for it. The next step then after that would be to think, you know, what do you need? Do you need external funding? Is there some internal funding maybe that you can provide yourself, or is it external funding you've got to go somewhere? But do have a think about it. I said earlier as well, think about it at a good time in advance. You know, the time to look for funding isn't the day before you need it. It's trying to anticipate that. I know it's not always as simple as that, but if you know you're seasonally going to be needing some funding, you know, in the winter months or in the summer months or around Christmas time or whatever, then you know you need to think about that and decide how are you going to secure that. And if you are going to secure it, you need to look and see what exactly how much you need. I do find when I'm speaking to businesses and they say, yes, I need some funding, they find it hard to quantify exactly how much they need and when they might need it. But that's an important part of the process. You do need to think that through. If you can't self-fund it internally, then look external, traditional and or alternative. So you do need to think externally. The business I mentioned earlier, that's in the leisure sector, they are going to approach, they have secured funding recently, actually just in the last few days, from Enterprise NI Loan Fund, and they're very happy with that. I think I said that. But they're also looking for an overdraft, and they want to approach the bank for that, but they aren't sure about how to do that. So I'm going to be helping them put together what I call like a funding proposal, not a fully fledged business plan. There's a few pages setting out what they're looking for funding for, why they want it, and they will be able to provide like a cash flow forecast and some assumptions behind that if the bank needs it. So some businesses find it difficult to decide how to approach an organisation when they do need funding. So check out this fund support finder there as well on the NI Business Info website. I will mention very quickly that as well as the funding support, all of the local councils are currently going through a tender process. They've awarded parts of the tender process, and there's some elements they're still looking at. And this council-wide, the 11 councils in Northern Ireland have all signed up to it, and they will be providing support to small businesses for free through mentoring programs. And there's going to be workshops, and there's going to be one-to-one support, and there's going to be signposting and all sorts of things available. And if you haven't approached your councillor or checked it out, do look it out. It'll probably not be available until, I think they're saying, really from the 1st of December. And there will be specialist support in there, not just for funding, but for marketing, for sales, for export help, all those sorts of things will all be available. You have to be eligible. You'll go through an eligibility process with the council, but it is worth checking out and keeping an eye on that between now and the end of the year, or certainly into January, and have a look and see what support you can get, not just from funding, but there is financial management and business planning support as well within that, but also all the other areas of support. So check out your eligibility for whatever it is you're thinking of applying for, the application process and terms and conditions before applying. If it is debt, ensure you can repay it, and if equity, be prepared to give up some control. We covered that. And if you do have repayments, just make sure you maintain regular oversight of those repayments and the external funding. And do check out the other TNI resources, which are there, existing support. That link there takes you through to their business guidance, business support, financial support, which is a lot of the stuff that I've been doing, but there's other support in there as well that you should check out and see what's available for you. Yeah, there's a handout that's going to be accompanying this here, and it includes some of the stuff we've covered, some new links as well, and it'll be sent out by Tourism NI after this here. I think Trish will be sending that out. And it will include some do's and don'ts for approaching lenders, so some tips, if you like, in terms of how you should approach lenders and things you shouldn't really be doing if you're thinking about approaching lenders. And that's us, folks. We're 5 minutes this side of 11 o'clock, so we have made it on time, and I think we have some time now for Q&A.
Yes, thank you so much, Tony, and lots to think about there once again. So yes, just as we'll be asking some questions to Tony shortly, if you have a question that you haven't yet put in the chat, go ahead and pop it in there now, and I'll pick that up today if at all possible. And also, as Tony mentioned, and as with all of our TED webinars, we'll be sharing a recording of today's session if you want to watch back any particular elements of that today, along with a copy of Tony's slides. And we have that supporting document, Tony, that you've drafted ready to go. So we should hopefully be able to get that up online later today, or certainly by tomorrow, all being well. So we'll get those everything up online as soon as possible, and keep an eye on your inbox. We'll share a little link to everybody so they can easily access all of that. You can also find the resources and recordings from all of our TED events and webinars if you head to tourismni.com/TED. I always have to do my little website plug, but now they've been quite gentle on us today, Tony. We don't have too many questions, so we'll motor through those, and hopefully we'll get finished up by 11 or very shortly after. So first question is, do traditional banks and alternative finance providers offer the same interest rates?
Yeah, Tricia, no, they don't. It's a quick answer to that. Typically, alternative finance providers interest rates will be higher than traditional banks, but it's not always the case, but typically they would be higher. Part of that's down to the fact that a lot of the alternative finance providers are online. They're people come in new to them by putting in their application, going through the processes. So the risks are higher because interest rate is a reflection of risk. So if the risk is higher for any lender, then the interest rate is likely going to be higher as well. Mostly interest rates typically get down to the individual business or the individual person. So you might get a range or a typical APR, a typical annual percentage rate, or typical rate of interest. But when it gets down to the person themselves when they go through that process, and some people may have found that out with if they're applying for a personal loan, they might say, oh, typical APR is 6.2 or whatever, and they go through the process and they get offered a loan at 7.5 because the credit scoring process has knocked that rate up. So the interest rates is a variable, is what I'm saying there, and it would typically be higher with alternative finance providers, but not always.
Okay, great stuff. So what can you do if a bank declines a loan request?
Yeah, good question. What can you do? A bank, what I say to any business is that if you do apply for a loan and the bank says no, or the lender says no, make sure you get it in writing. Make sure you understand exactly why you're being declined, why the loan is being declined. Quite often when I speak to businesses and they say, yeah, my loan was declined, and I go, well, why? And they go, I'm not quite sure, and said, oh, couldn't we pay it or whatever. And I go, well, show me the letter. And often they can't find the letter. So the thing about banks particularly, if you're applying for a loan, sometimes people see what's called a soft no. And a soft no is where maybe they go to somebody in the bank, talk about what they're looking for. The bank have a quick look at it and say, I don't think we'd finance that. I'm not sure, that's not for us, it's whatever. And they walk out and they say, well, the bank have turned that down. That's compared to a hard no, which is where you actually apply to the bank, you put in the application form, and you get a formal decline letter or email saying your loan's been declined and here's the reasons for it. So it's important that if you do get a decline, you know which one of those two it is. So if it's a soft no, that's just been some informal thing, or it's a hard no. But I always say to anybody, if the bank have said no to you, get them to put it in writing and explain exactly why. Because if they give you it in writing and explain exactly why, you at least have an opportunity to appeal it. Because banks will all do an appeal process. You can go and appeal that, or you can, and appealing it, you can address the specific reasons that they said we wouldn't do that for you because, and in some cases they may have misread something or misunderstood something. They may have made an assumption about something that isn't correct, and you can fix that up in the appeal process. So I would say to people, if you've been declined, don't give up. Have a look at it. Make sure you're clear about why they've turned it down, and then go about trying to see, can you address that and fix it up. And if you can't do it yourself, then look for some support that could help you, either your accountant or somebody who specializes in that area.
Yeah, no doesn't always mean no, it just maybe means not right now.
Not right now. It could be timing. Yeah, it could be if somebody wants it after a year of business, and actually they need to have a couple of years of trading behind them before the bank can look and say, do you know what? Yes, this business is profitable, it's growing, etc., and we can now support that. So it may just be a timing issue. You're right.
We do have a person here who has a specific, they were declined and they were given a specific reason. Now, it might be too specific, but I'll just run it by you here. So someone who was declined for capital funding from a mainstream bank because they had an investor who would need repaid. So they're wondering how could they avoid a similar mistake, or is there anything they could do differently if they were applying again? So
is that on the chat, is it?
Yes, it is. So I was previously declined for capital funding from a mainstream bank because I had an investor who would need repaid.
Okay, so I'm guessing that, and again, it's maybe difficult to pick everything up from that there. So declined capital funding from a mainstream bank because an investor needed repaid. So I'm guessing this business had an investor who was who put money into the business and needed repaid, which obviously is what that's saying. Yeah, banks don't like lending in businesses to, or loans that might, or investors in investment in businesses that could be repaid ahead of them. So basically, so in other words, if the investor put in, I don't know the numbers here, but say the investor put in £20,000 and the person went to the bank for some capital funding of £50,000, the bank would have a concern that if they gave £50,000 to the business, some of that funding or all of it could end up paying the investor, and it wouldn't go for the main reason that they're putting the money into the business, i.e. into capital or some sort of capital equipment or capital investment. So banks have a way of getting around that, and the business can think about that. There's a way of providing it, because I'm working with a business at the minute who have a lot of family loans in the business, and those family loans are deemed to be long-term capital, and there are no formal repayments around them. And they are approaching the bank for funding, and I've suggested to them what they can do is offer what's called a postponement of the investor funds, if that's possible. So in other words, say, look, yes, if you give me the money, I can provide a letter of a legal letter that will confirm that this investment has been postponed in favor of the bank debt. In other words, they're not going to get repaid before the bank gets repaid. And banks would consider that. So there's a way to get around it by, if you like, postponing any payments to the investor behind the repayments that would be scheduled to the bank. Now, I honestly don't know if that's possible with that person. If they wanted to have a chat with me afterwards, I'm more than happy to give them 5 minutes if they wanted, just to discuss that in a bit more detail. But my reading of that is that the bank don't want to lend the money because they're worried that might end up going back to the investor. If it's not that, then I'm happy to pick it up afterwards if that's required.
Okay, no worries. I will be able to link you up there. That would be super. So we have someone here who's wondering, so if a cocktail of funding is the best approach, who would be the best person to help navigate that, to help keep a business on the right track in relation to that?
Okay, good question again. A cocktail of funding is it depends on the level of funding. So it depends if the cocktail of funding is 20,000 or it's 200,000. Because you'll be looking at different lenders, you'll be looking at a different type of lender, if you like, for that sort of funding. But if it is somebody who's thinking about going out and they need a bit of alternative finance and a bit of traditional finance, some family lending, that to me probably needs the input of somebody with financial expertise like the accountant. So the person to start with would be the accountant. Now, I am an accountant myself, but I know there's other accountants who maybe aren't really familiar with funding and funding processes, as in applying to banks for financial assistance. But it would be the first place I would start, would be to do that. There is if your accountant can't help you, then it might be something you would think about when the council programs are released, because if that's something you need help with, then if you go in through the council programs, they can find somebody who's an expert, if you like, in that area. And I'm on quite a lot of the council programs at the moment, and I will be going through a tender process to be one of their, they call them expert category people on business finances and that. So people like me, depending on which council area you're in, you may find somebody who's got that expertise. So I would start with your accountant. I would think about the council programs when they come out, go and talk to the council and say you'd like some help. Is there anybody who specialises in that area? And let them help you. And the third option is to speak to your broker. So brokers sometimes will look at a cocktail of finances, and again, depending on the level of funding that you need, they would look at getting the funding from person A, person B, and looking at the repayment capabilities the business would have to pay that back, and can approach those lenders on your behalf. That's another alternative. If it is high-level lending, then those Invest NI funds that I talked about would be a high-level cocktail of funding, because they can provide some debt funding, perhaps some equity funding, even perhaps some grants in a mix of funding there. So again, it depends on the level. Hope we've covered that now.
Yeah, no, that sounds great. And we've just one more I'm going to finish off with here. So if you're turned down for a loan, would that affect your credit status or credit score? So I suppose it's that fear of, if you're turned down, does that mean you need to wait a while, or how does that work with the business?
Yeah, well, if you apply through an online platform and part of that process includes a credit search, then the answer would be yes, it will affect your credit rating. What happens typically if people get declined through online, they go and try something else, and they try something else, and they try 2 or 3 places within a day or two. That can seriously affect your credit score, because that's a lot of searches, a lot of footprints, if you like, on your credit history, and especially if you've been declined once, twice, 3 times. So if you were applying online and you were declined, I'd suggest you take a pause. if you can, timing wise, and leave it for a while, as in weeks perhaps, before you try it again, and you have a look at it that way. So it's probably going to affect your credit score. If when I talk about the soft no's earlier on, the soft no to your loan request, so you walk into a bank and say, hey, would you think about lending me 20,000? I'm thinking of doing this, that, and the other, and they go, I'm not sure we'd do that. That's really not what we don't think we'd fund that type of thing. They would have to have told you that you're going to be subject to a credit search before you go through that process. In fact, most of the applications that you go through will tell you if you are going to go through a credit search or not. If you are and you're declined, then it will affect it. If they don't offer that for you, or if they have what's called a soft search to give you an indication, then that will be okay.
Yeah, very, very similar to personal credit score set as well.
Exactly. Yeah, it is. Yep.
Yeah. Okay, very good. Thank you so much, everyone, for all your questions today. And I hope you find the session very useful as I have. I find it very interesting. So I'm going to just take 1 or 2 minutes. Thank you for your patience, but just to quickly give you guys a quick update on some other things that are coming up as well as part of our ongoing TED program. And as always, if you go to tourismni.com/TED, you can see what's coming up, but also some of our recent activity where you can find links to recordings and supporting materials, like from Tony's sessions today and last week. So we now have digital hot topics webinars open for registrations. They're taking place in December. So on the 5th of December, we're going to be finding out about AI for growth and efficiency in your tourism business. And then on the 12th of December, we're going to be hearing about new digital marketing trends. So that's going to be Kieran Connolly from Profile Tree, who we've heard from before. So really looking forward to that. And then sooner in the diary next week, we've got a busy week ahead. So on Monday, we're delivering the last of our Embrace a Giant Spirit experience development roadshows. We're going to be up in the Everglades Hotel in Derry, Londonderry. So if you can make it along to that, there's still time to register, but also we're going to be doing a virtual live stream of that session. So if you haven't made it along to any of the roadshows, but you'd really like to see us in action live instead of watching a recording, you're welcome to sign up for that. So again, if you go to tourismni.com/TED, you'll be able to register for that. There's still time. And then also next Tuesday, we've got the Make It Here campaign information webinar. So we're rolling out phase 2 of our Make It Here Careers in Tourism and Hospitality campaign very shortly. And we're going to have an information session at 2 o'clock next Tuesday afternoon. And again, that'll be online, a webinar just like today. So if you head to tourismni.com/Make It Here, you can find out a bit more about the campaign, and also there's details there for how to register for that information session. So lots of exciting things coming up. Okay, so I've whistle stopped through that because I'm aware that we're already after 11. So thank you so much, everyone, for sticking around with us, and thank you so much to Tony for another great session today. Hopefully we'll be chatting to you again soon on whatever the next finance thing is we need some insights on. And thanks also to Barry and Jordan looking after all the polls and keeping everything working for us behind the scenes there from Eventful. So thank you also everyone who joined us today and for the last couple of weeks. Hopefully see you again at the next thing. See you again soon. Cheers, everyone.